This presentation provides a summary of the Office's report, Audit of the Legislative Assembly's Financial Records. For a copy of the full report or further information, please visit our website at www.bcauditor.com. As the non-partisan independent auditor of the Legislative Assembly, the Auditor General audits the government reporting entity. This consists of ministries, crown corporations, and other government organizations, such as universities, colleges, school districts, health authorities, and similar organizations that are controlled by or accountable to the provincial government. The Office of the Auditor General serves the people of British Columbia and their elected representatives by conducting independent audits and advising on how well government is managing its responsibilities and resources. Under the Auditor General Act, the Auditor General conducts and reports on both financial audits and performance or value for money audits. The Act also allows the Auditor General to follow up on any recommendations made in reports. In 2007, the Office audited the financial framework in place around the Legislative Assembly's financial records. That audit concluded that the minimum standards established by the Auditor General of Canada's Financial Management Capability Model were met. However, it also identified significant opportunities for improvement in the controls and procedures the Legislative Assembly used around its financial affairs and made recommendations to address these. The 5 high-level recommendations made in the 2007 report addressed identified deficiencies in internal controls and procedures, roles and responsibilities, planning, and public reporting. However, subsequent follow-ups showed very little progress against any of these recommendations. This table summarizes the 5 recommendations contained in the Office's 2007 report and the status of implementation of those 5 recommendations 5 years later. In the 2007 report, the Office recommended that the Legislative Assembly prepare and publish annual financial statements demonstrating how they have expended their Vote 1 appropriations. However, as of today, the Legislative Assembly still does not prepare periodic financial statements. Given public interest in this area and the lack of publicly available financial statements, an audit was conducted of the closest information the Legislative Assembly has to typical financial statements, its trial balance. Trial balance results reflect the collection of the organization's financial activities for a specific period of time into specific accounts. These trial balance accounts can then be grouped together later to form the foundation for a set of financial statements. We audited the financial information in the Legislative Assembly's trial balance for the 3 fiscal years ended March 31st, 2009, 2010, and 2011. Per a specific request of the Speaker, the audit did not include the $119,000 annual constituency office allowance members received to operate their offices, except to the extent that this money was used to pay constituency office staff salaries and benefits through the Legislative Assembly payroll system. The audit identified a number of significant concerns. This result was unexpected, even though many of the items we identified in this audit had already been raised in the Office's earlier 2007 special report. The significance and pervasiveness of the problems was such that the Auditor General was unable to determine whether the financial information in the Legislative Assembly's trial balance was fairly stated. As a result, the Auditor General is in the position of having to issue what is called a denial of opinion statement. An auditor's job is to determine whether reported results are fairly stated. In making that determination, an auditor tries to determine what level of misstatement in the reported results would impact the decision of the users of this information. In auditing, this concept is called materiality, and in making this determination, an auditor is required to consider both the quantitative and qualitative nature of the information being reported. Given the nature of the organization being audited and the public sensitivity around the expenditures of elected officials, even a relatively small amount may be qualitatively material to users of this information. The combination of inadequate accounting records, coupled with numerous and pervasive poor controls, meant that there was a significant risk that there could be a misstatement in the trial balance results that users of this information would find material. As a result, the Auditor General was unable to conclude that the trial balance results were fairly stated for any of the 3 years looked at. A denial of opinion means that the organization's records and controls are so deficient that the auditor, regardless of how much testing they do, is unable to conclude with any level of certainty whether the reporting information is right or even wrong. A denial of opinion is very rare and is perhaps the worst possible outcome from an audit. The report details 4 control deficiency areas. These are some of the more significant examples of the issues reported to management. The lack of bank reconciliations represents the failure to implement a basic and widely used control procedure. The fact that these were not being performed is particularly disappointing, given that this was a recommendation in the Office's 2007 report. The audit also found inadequate segregation of duties in certain key areas. The Legislative Assembly is a relatively small operation, and so it would not be unusual for it to have some challenges in segregating certain duties. However, the audit found inadequate management oversight to compensate for this. The lack of supporting documentation for expenses also demonstrates a failure to meet a standard business procedure. This, and the lack of disclosure of members' payments, exposes the Legislative Assembly and members to the risk of a loss of public credibility. The scale of the internal control deficiencies identified over the 3 years can be illustrated by the approximately $1.3 billion in adjustments that were identified. To be clear, this is the gross total of all adjustments, but it is still much greater than would normally be expected from the audit of an organization of this size. Canadian generally accepted accounting principles represent the standard rules used in Canada to maintain accounting records. These are the rules to which the BC government must adhere. During this audit, we found significant departure from those rules. This was a key consideration in being unable to conclude whether the Legislative Assembly's trial balance is fairly stated for any of the 3 years audited. The Legislative Assembly's accounting records were significantly incomplete. A notable example of this was that the Legislative Assembly staff had not been recording deposits received from government for a number of years. This resulted in the Legislative Assembly's accounting records showing one bank account with an overdraft of $133 million and the other with a positive balance of $5.5 million, while the actual balance for both was zero. Other examples in the report cover poor accounting for the Legislative Assembly's buildings and equipment and a lack of inventory records for the Legislative Assembly's dining room or gift shop. Good governance and strong controls start at the top of an organization. In most public sector organizations, that governance and oversight function is fulfilled by a board of directors. They provide direction to management to achieve the organization's vision and mandate. They also monitor management to ensure that they are following the organization's values and achieving these desired outcomes in the most effective and efficient way possible. Governance and oversight of the Legislative Assembly is the responsibility of the Legislative Assembly Management Committee, or LAMC. The LAMC Act defines a wide range of responsibilities for its members, including those that encompass the oversight role performed by a more typical board of directors. This includes setting policies, supervising and managing staff, and other matters required to ensure that the Legislative Assembly is operating efficiently and effectively. This audit found that the LAMC, the Speaker, and the Clerk are not operating effectively as a governance and management oversight body. We also found that the LAMC was not receiving periodic financial reports to help them understand how well management was executing its responsibilities. However, even if these reports had been provided to LMAC, the frequency of its meetings may not be sufficient to provide timely oversight. Given the significance of the issues identified in this audit, audits of the Legislative Assembly's financial records will continue until they have all been resolved. The scope of the audit will also be expanded to include all portions of the $119,000 constituency office allowance and all other payments made at constituency offices. In line with our follow-up process, we will be reviewing the status of the implementation of the recommendations made in this report. The 2012 summary report only included a single recommendation, which directs the Legislative Assembly management to fix the numerous deficiencies brought to their attention in these more recent audits and in the previous 2007 special report. That concludes our summary of this report. To read this report and our other publications, or for more information about our office, please visit our website at www.bcauditor.com. The Office of the Auditor General encourages your feedback on this report, as well as your suggestions for further audits. We look forward to hearing from you.